Hey guys, Aaron here with Carnivore Trades. So I want to do a special video today on a specific topic and how to trade really impulse moves, specifically gaps. And it's a topic that I feel like is good to cover because I myself have left profits on the table. I've also taken losses before trying to fade these types of moves. And it's very important to be able to recognize those. There's also situations in these instances where, if you guys know my methodology and my style, I very almost never condone any form of chasing. But even in these specific isolated setups, if you are experienced enough, you know what to look for, you can actually chase these moves. Again, if you know what to look for and what to do. I think it's a very good topic, and it's a very good, just concept to have in your arsenal. I wouldn't even say it's a setup so much. It is a setup, but it's more of just like a concept to have in your arsenal and knowing how to recognize it. So really what do I mean? It's not just a gap and go, but because any day could be a gap and go, right? Especially if we're in an uptrend, or a downtrend, right? It could be a trend day down. But usually, specifically, the criteria that we're looking for here is, I'm just going to use the bull side for now. It's usually a bull trade. It's not so much. There are a few examples that we can use on the bear side. I'll try to point them out, but it's more so a bull side trade that I would say 8 times out of 10. But usually it's going to be an instance where you have a previously defended resistance. That could be a trend line, right? It could be a down sloping trend line you're hitting, or it could just be horizontal, right? But it's a previously defended resistance that's been defended at least 2 or 3 times, and honestly probably the more the better. And when that previous resistance gets gapped above, it's essentially your signal to just, if you're long, this is your time to be aggressive and hold that. Do not get gun shy and take profits off the table. Maybe trim, but do not take all profits. Make sure you're leaving runners start trailing. Or even if you're, super aggressive and, the setup fits, you can chase it long, and you can, if you know where to put your stop, you can, make it work. We'll talk about examples of that later. Lastly, whatever you do, do not short. And if you are short, just get out. And this is the market flashing the warning sign, just saying get out, right? So I'm going to talk about these examples here more in detail. But right now what we have here, obviously we had a nice little breakout. We don't really have quite an example here, but a lot of the time these will happen. It's very similar. We had a setup back in October 9th, a week or two ago, on CPI. It's not really a gap and go. We did have a little resistance level there though, but this does meet kind of the in spirit of criteria. But generally you're going to look for something that's on a news release, a volatility event, FOMC, CPI, jobs data, on or around that. Sometimes it can actually be before that. In fact, this is a perfect example. CPI came out on the 10th, right? Then we had PPI on the 11th. But what did we do the day before? We just blew through that, right? The market was telling you, like, hey, we're making this impulsive move, we're breaking out, right? So don't fight that. It can happen the day before, or it could happen the day of, or it can happen a day later. One of my best, actually, I'll share with you guys right now, my best day ever as a trader was right here, March 16th, 2022. And this was the day of FOMC that year, in that month. But we started rallying before then. So that the market kind of had made its mind up, made that impulse before the Fed had even come out. Again, not to get sidetracked here, but you get the idea. It doesn't have to be right on the event. It doesn't have to be a news event. It can be before it, it can be after it, but usually that's where the best ones are going to come from. Again, very important, previously defended resistance level that's been hit multiple times. So a very good example right here. We're just going to go back not that long ago to July, and we're just going to take this trend line down here. So this is pretty perfect, right? So you have a pretty good hit there. This is pretty straightforward. We just melt up, and we gap straight above that. Gap up to 5,500, and ended up rallying another 170 points or so. We did eventually pull back here, but if you were shorting here, maybe you could have gotten away with it as a swing if your just stop was above the all-time high. As a day trader, you would have gotten rocked, and you probably gotten margin called. So that's your sign to get out of your short. That's not to say that it was a bad idea to short here, right? Previously, you had a 618, you went right into it, but that gap above, it's telling you to just get out of the way. It's telling you just get out of the way there. Another previously defended resistance right here. We could even stretch it down if we want to line it up. 5650, 5670, right in that area. Guess what? We gapped above both those levels right here. What was this? The day after FOMC. We had a sell there and we gapped above. It's just when the market makes its mind up, it makes its mind up. And unless it's going to reverse, in the first 30 minutes of trading, something like that, usually it's going to stick. And you'll know pretty quickly if it's not going to happen. But yeah, don't fight these types of moves here. Back in May, we talked about this ad nauseum. I had this flag on my charts the whole time. Gap above, flag, gap above. This was also a CPI. Post FOMC in May. Those of you guys who like these patterns, you might call this a descending broadening wedge. Gap above, gap and go. Jerome Powell's famous flip. This is a big one. Right? Got above, pause, big gap there. Dude, forget your fibs. I love fibs. 786 is perfect, but when the market gaps up, 1% overnight, that's impulse. Do not short. Get out of the way. Previously defended 1, 2, 3, 4 times. Cracked above it there. Big gap. No pullbacks. We still haven't gotten anywhere close to that level. Bear side. And it doesn't happen that often, but previously defended support, right, as opposed to resistance. Let's go to the 4-hour so we can see it a little bit cleaner. Was this around a volatility event? Yes, it was. FOMC. Next day, gap and crap. Day after that, clean gap through the lows. Don't buy. Don't buy until you get super extended, right? Want to watch out for those impulsive moves. Another one, IWM. Fortunately, on the right side of this one, easily the trade of the year for me. Clean wedge. Everybody hated it. It wasn't participating in the rally. QQQ was leading. All anybody cared about was Mag 7. And we had CPI, right? Volatility event, Newsday. 3% gap on the open. Get out of the way. Don't short. I don't care what your thesis is. Just that's not a situation you want to be short in. If that doesn't reverse immediately, it's going to do exactly what it did there. Now you can say, well, but it did this first. Well, can you hold it that long? You're going to hold it all the way up there? And even now, it's still a lot higher than it is there, or it was after that drop. So these impulses, you don't want to get in front of these. What you can do, if you're looking to chase trade it, potentially, again, it depends on sizing. I don't know if I would even attempt to chase IWM with that gap. You'd have to put your stop, though, and this depends on the sizing and whatnot, but you'd have to put I would just put a stop below 205 on a daily close. It can back test all it wants the next day, but as long as it holds that, you can still go up. Very much likewise, And in this example, you know, if it turns red, right? If you close that gap and the 618 holds, you know, I would definitely call that a false breakout, and you're probably going to get, you know, rocked. You're going to fade this whole move up here. So you got to size your trade. Like, you're not day trading it. Maybe you are, but your position size should be a lot smaller, because you know, you're already risking 50 points just by right off the bat. You're risking 50 points. You know, if you're swing trading, you know, not using leverage, who cares? 50 points is nothing. But obviously, if you're chasing momentum, you should care. Probably the best example I can give you, and this is something I would not have done when I was younger. It took me a long time to learn how to do this, because I was taught, A, don't chase, and B, you know, take gains when you get them. And I was taught, like, oh, something's overbought. It's up too much. You know, it's up too much right now, so I have to take profit. No, the hell you don't. No, you take profit when the market makes you take profit. What do I mean here? Shanghai. I was fortunate and, you know, smart enough and talented enough to be on the right side of this, right? Didn't have the best entry. I was on the right side of it. And when I saw these gaps take place, I knew an impulsive move was coming. And the old me would have just sold everything on right here, or into one of these. But that big gap right there, look at where this closed. 3,087. It opened at 32. That's a 32, 3,200. That's a huge gap. That's a huge percentage gap for an index. This isn't a stock, it's an index. It's a whole market. When that happens, that's impulse. Like, let that go. Let that go higher. Look at the HK. This is impulsive, right? FXI. Previously defended resistance, right? 1, 2, 3, inverse head and shoulder. We just gapped above it. What are you taking profits for? Why are you getting out of it? You just waited this whole time. Let the market reward you. Be aggressive. Put your foot on the throat, right? That doesn't mean you can't. I'm not saying you can't trim or shouldn't trim or start trailing your stop. But don't get out. Leave runners. You know, I did a whole video on this, on leaving runners, and I encourage everybody to check it out. It's on the channel here. But you'd be surprised at how much just leaving a 10% position. So if your position is, you know, X whatever, 10% of that position, how much that can add up to. I've had so many trades. In fact, the one I was just talking about, the Russell 2000, we're in RTY futures. The last leg of it was only 10% of our original entry, and it was by far the largest gain out of all the leg outs that we had. Why? Because it was 200 freaking points, 220 some points, which on the Russell is an enormous amount. So be aggressive. When you see impulses like this, don't get gun shy. Don't be afraid to go for it. Now, in this case, would I chase this long? No. Would I chase that long? No, that's way too high. But if I was already long, yeah, I would keep my foot on the gas. You know, in this instance here, you know, like we were talking about, let's go back to the SPX. Yeah, like this, you know, if you wanted to try to chase that, stop, even just stop below the trend line, you know, if you want to be conservative, yeah, that's a little bit different. You're not chasing a huge gap like that. Or even here, look, we even back tested the trend line intraday. So that was actually pretty clean if you did it that way. Same thing here, gap up. So if you're going to do that, make sure you have a clean stop loss where you know you're wrong. I would say if you turn red and close red on any sort of gap, close red specifically, yeah, that's going to be a failed breakout, and you're going to go hard the other way. So again, you got to know what you're doing. You got to have nuance if you're going to do that. Video really I'm doing is not so much specifically to teach you how to chase things, but more so to teach you how to keep your foot on the gas when you're in something, and how to get the hell out of the way when, you know, you're short. If you're short, just get out, right? Cut your losses there. There's really not that many good examples here from 2022, and that was a big bear year. But we can talk about, I mean, these big gaps here, they're impulsive. Not really the best, though, in terms of example. It's more of a bull trade. It happens much more on the bull side. We did have a good example, though, this year. Maybe you can make a case right here in August of last year. It's not the best, but push down, gap and go hard. This level was defended. We gapped below it and kind of went back up. Didn't follow through to a few days later. This one was pretty good, though. 1, 2, 3, boom, gap through it. Don't buy it till you're extreme extended. So anyways, just a couple of tips there. Hope that makes sense. Again, the gap up, like when I say gap and go, like this is, you know, this little minor gap is not a big deal. It's got to be a previously defended level. Heck, even here, I mean, we didn't technically, we gapped up enough there. I would give him the benefit of the doubt there. That's been previously defended too. But I mean, these levels, like this is clear. Like your thought is that, right, like it takes a while. I don't know if everybody's the same in my, here's another one too, right here. Previously defended, gap up, get out of the way, right? But I don't know if everybody's thought process is the same as mine when I was taught, which is that when things get overbought, you don't chase it. It's bearish because it's going to pull back. But I've learned over time that the more overbought something gets on a breakout, the more, it sounds crazy, but the more bullish it is. Right, you look at this impulsive break on the, this is RSI here. Look at how overbought it got. And look how much higher we went. We never made a lower low. Look at the Qs last year. Right here. That May breakout. Look how hot the RSI was. Before it finally pulled back. Look how hot it got here. Look how hot it got here. Especially on an index. On a stock, individual stock, different story. But don't be afraid of, oh, it's up too much, I got to sell it. No. You sell it when the market tells you, when the market makes you sell it. Just like when you're short, right? I say this to the members in trading room all the time. When we're short, that's not that many good examples of being short here lately. But yeah, if you were short up here, right, and you get this big move, don't cover down here because we bounced. Forget that. You know, oh, yes, take your profit. You know, make sure you lock in a gain. And then leave runners, but here's your previously defended support. It's on bulls to reclaim that, to make me stop out. Keep riding that short till they force you to stop out. It's okay if you want to take profits into the next supports, but don't be getting gun shy and, oh, I got to bail out. No, don't do that. Make money. Take your reward from the market. Force them to pay you. So hope that helps. Again, it's something that it took me a long time to realize, figure out, and even sometimes I even miss it still. Like I even missed this most recent one that I even just talked about right here. You know, that gap there. I was thinking that this trend line was gonna pull it back, and it didn't. So something that's always, you know, obviously, as in any profession, we're always learning. But hopefully that helps you guys. Again, just some advice there, some tidbits. If you agree, disagree, that's fine. This is just my experience. And again, yeah, hopefully that can help anybody out. Anyways, you guys like the content, don't forget to like, comment, subscribe if you're interested in premium commentary, trade alerts, live day trading room. Come find me on carnivoretrades.com. You guys take care, and I'll see you guys all in the next video.